Alright, so in this video we're going to talk about what an order block is and how to use it in the market. So as you can see over here, we have two diagrams, one an uptrend and one a downtrend. If you can look at this uptrend here, the way to identify an order block on an uptrend is knowing where your last down candle or down move before the major move up breaks new structure highs. Okay, and we wait for price to come and retrace back to the order block, the last down candle or down move before the major move up goes up. Okay, same thing goes here for the downtrend. When you're on a downtrend, you're looking for prices to move bearish, for prices to break structure, and then you're looking for the last up candle or last up move before the major move goes down, breaking structure. Then you would wait for price to retrace and go all the way back up to target that last up candle, the last up move before the major move goes down. All right. So as you see here, this is how what an order block is essentially. Okay, I'm going to go break it down a little more here in these other diagrams over here. So let's go all the way to the top right here. Okay, we're going to start with an uptrend example. As you see over here, we clearly have an area where price is going bullish. The market is going bullish entirely. Okay. And then I highlighted this area here just so you can see it clearly. All right. When you see an area where price is bullish, more green candles than red candles, obviously. Then we wait for price to retrace, to come back to the last down candle right over here where we have this demand area highlighted. It would touch this last down candle or down move before the major move goes up. Okay. Once this major move breaks above new structure, we'd wait for price to retrace, to pull all the way back up. Pull all the way back down and target the last down candle before the major move breaks above a new high. Okay? And so this is your typical buy right here. When price hits that last down candle or down move, that's where price starts to push up. Okay? So we're going to break it down just a little more for you guys on an area on two other charts down below. Okay, so let's go down here just to make it a little more clear if you guys haven't understood it quite yet. Right over here. Okay, as you see clearly here, this is the bullish example. Price is pushing up, down, up, breaking new structure. And as you can see, price needs to retrace now, come back to the order block, to the last down candle or last down move before price starts to retrace back up, right? Which is right here. This would be your buy as soon as price targets this low. Typically, price should retrace about 80 to 90% all the way back down to an area where the last order block is and then go up, right? Now, mostly I tell other people and other students that in order to find your order block will mainly be below your break of structure. Okay? Let me say that again. When price breaks structure, when price extends like this, in this case, in this bullish example, price needs to retrace, okay? It has to break structure, and then price needs to retrace, and typically your order block will be below your break of structure. That's where the best POI, or point of interest, which we'll talk about later, is going to be. This is your point of interest. This is your order block, your last down move before that major move goes back up. All right, so let's go down on the bearish example here. All right, look over here. So we have a downtrend occurring. Price is going down, pulling back. All right, price is then breaking new lows, breaking structure. Now price needs to retrace all the way back up to then test the last up candle or up move before the major trend goes down. Okay, that's typically how the market moves. Notice again here, we had another break of structure. Okay, typically the market should come back now, back to the last bullish candle or bullish move, which would be right here. And this is where price will test and then bring price down. Okay? It's very simple, very easy. This is how order blocks are seen in the market. Okay, now let's go back up here and talk a little bit about some more examples here. Okay, as I mentioned, order blocks are usually below the break of structures. So anytime price is pushing above a break of structure, price will always come and mitigate. We'll talk about mitigations in another video, but it needs to come back down to an order block somewhere in here where it's the last down move or down candle before the major move goes up. Okay, again, price breaks, comes down to a demand level, then takes off, tests the order block, the POI, point of interest here, then breaks above. Price then comes back above, breaking the structure. We know the last down candle needs to be tested, so price needs to come back and retrace to test that order block, okay, before the major move up goes up like this. Okay, it's a repetitive motion behavior that happens in the market all the time. All right, so to trade an order block, price has to extend fast. All right, notice again, price needs to extend fast, and it needs to break above structure in order for this to be a legit and real order block. Anytime price breaks above and or extends and breaks above structure, then we have a legit and real order block. When price just pauses here and makes this like double top right over here and then comes back down, this cannot be seen or seemed as a true order block because price hasn't broken above structure. We need price to literally break the structure, the break of structure, this last high or higher high, and then show us that price can come back to retrace back to the last down candle and last down move before the major move goes back up. Okay, so over here, in order to to trade an order block, price has to extend fast, right? So we need to compare higher time frame order blocks versus lower time frame order blocks to show the difference. So what do I mean by this? To compare higher time frame order blocks versus the lower time frame order blocks. Typically, when you're looking at a major structure in the market, remember the three structures that we've been teaching you in the structure video. If you don't know, please refer to that video right now. But in the market, there's three major structures. We have the major structure, right? A major structure. And inside of that major structure, we have what's called substructure, which is going down inside of the major, right? And then we have minor structure going up. Substructure always goes down, no matter what. Minor structure always goes up. If you can see here, minor structure over here took over the substructure. The substructure low over here, okay? And here is our minor structure from this low to this high. So right now we know that minor structure is in demand, okay? So if you see this entire major structure, I want you to see this very clearly, okay? Notice this move here, this high and this low, okay? And let's just typically look at this as a daily time frame, okay? The order block here can be this major move down from this high, and I'll mark it for you guys, from this high to this low, right here. Okay, this is a move, which means there's multiple candles in one high and low area right over here. There's a move, like for example, this is a high and this is low. Prices, there's probably many candles in this move down here. Okay, so when I refer to a move, I'm referring to multiple candles inside of a major market structure. Okay, so in here you can picture and see that there's major candles in here, and we'll talk about this on a live chart after this. But there's many candles in here that make up this move, this downward move, before this minor structure here breaks above the substructure. So now we can tell ourselves, well, hey, this was the last down move before the markets broke above. Okay, now we know that price needs to come back to this major move, which is this move here, to come and test. Once this major move comes and tests this area of demand where the order block is, then price prices should relatively push high. Okay? So now that you guys understand what order blocks are, all right, make sure you test this and highlight every order block. Look at a trend, look at an uptrend and then a downtrend. Once you find out and mark all the order blocks, you'll be able to see the order blocks clearly. All right? So just to recap on what we learned today, for an uptrend, the last order block is a down candle or a down move before the major move goes up, okay? And for the uptrend here, I'm sorry, this is the downtrend here. For the downtrend, it has to be a last up candle before the down move. Okay, an up candle or a down candle before the major move goes down. And that's what order blocks are, simply.